Hello guys, hi, this is Ganesh Naik. I help finance professionals and students to excel in their career. And I also help students who are appearing for FRM CFA exams to help them to clear their exam in the first attempt. Now I'm creating a short video for FRM Level 2 students who are planning to give their exam in the November 2022 session. Okay, I'm walking them through the entire book and highlighting which concept or which part or which page is slightly important as per my understanding for the exam, this exam. Okay. So let us start with this chapter, which is this book, basically Operation Risk and Resilience. I've also created videos for other books also. Go and please check the playlist, which is available on the YouTube. Further, let us go toward this book, which is book three, Operation Risk and Resilience. It's a very heavy book in the sense it's lengthy. There are a lot of chapters, a lot of theoretical chapters. Okay, so a lot of people actually underestimate this book. So for them, this a list of important concepts will definitely be very helpful in their last minute revision and last minute preparation part. Okay, so I'm starting with the first chapter, which is the principles of the sound management of operation risk. This chapter has been revised. That's the reason you find it as written as a revision. Okay, so if you look at the first part over here, these three sections are important, marking it as star. Then when we move towards the operational risk part, okay, over here, this entire part is not important because they have been discussing this more in detail in the next module. So I'll be highlighting all of them over there in more detail section. Okay. The second module is actually slightly important from this chapter perspective, where they're talking about the code of conduct, important, marking it as star, this section. Okay. Further, when they move towards that, the third principle, the culture is important. The overall framework should be connected. It's important. Best practices, clear line management, more or less theoretical. Periodic review is also theoretical. These 2 points, first two bullet points, are important, marking it a star. This part, the committee structure, committee composition is important. Internal, external factor, rigorous. New activities in product line, important. Further, as we move ahead, this paragraph is important. Risk transfer should not be seen as a replacement but as a complement. That section, this entire principle continuity business planning part is important. Operation risk management framework is theoretical role of supervisor. You can read this paragraph, slightly theoretical. Tools for assessing the operation risk side. RCSA is important. Sorry, KRI and the RCSA is important. Then the feature of the control environment. These bullet points is important. And this paragraph is important. Vacation policy, there has been theoretical aspect being tested in the past exam. That's the reason I'm highlighting. Technology risk, you should read entirely. And the outsourcing risk, you should also read entirely. Outsourcing risk has been tested in the past exam. Okay. That's the reason I'm highlighting it and marking it as star. Let us go towards the next chapter, which is more related to enterprise risk management aspect. There are two chapters. So both the chapters will be combined together and asked as a question. When we go towards the enterprise risk management part, this paragraph you should read at the micro level. This part is important, marking it a star. Development and implementation level, this paragraph is important. At the implement economic and the accounting value part is important. Mark it a star. Risk aggregation is okay. The economic and regulatory capital part is important, marking it a star. Risk to retain and risk to, this entire part you should read, marking it a star. Let us move to the next chapter, which is ERM again. What is ERM? This chapter was actually previously in level 1 and they had put it for level 2 to combine it together. ERM cost and benefit, this entire part important. Okay, integration of business process. Over here, when we talk about CRO, the hierarchy part of CRO is important, marking it as star. ARM component, corporate governance is important. Portfolio management and line management is important. Yes, we are moving toward the third chapter now. Sorry, the fourth chapter now. We are moving towards risk Implementation of robust risk appetite framework. This is also slightly lengthy but theoretical chapter. Over here, the best practices limits part is important. Responsibility for risk is important. Risk appetite and risk culture, important, marking it a star. RAF and firms planning process is okay. You can read this paragraph and these two paragraphs. RAF challenges, communication part is important. This part is also important. Aggregation at the group level is challenging, that is also important. Within stress testing, read this paragraph. Firm-wide risk aggregation challenges. Okay, lessons learned from RAF. In that, primarily Royal Bank of Canada is important. It can get tested in the exam. National Bank, Australian Bank is okay. Scotia Bank important. Mark it as star. Commonwealth is okay. Moving ahead towards the next chapter, as we move ahead, banking conduct and culture. This chapter, along with one more chapter, which is risk culture, both of them can be connected and asked as a question. Okay, more or less theoretical chapters. So over here, the first point that talking about why we are talking about culture as such. This is more theory, not so important. Yes, this paragraph, this entire section is important. Mark it as star. How banks are making sure that their culture is improved. Okay, point number two, point number three, five is important. Progress is redefining bank culture, more or less okay. This part, marking it a star. Rest is theory, performance incentive for improving culture, staff development, this paragraph and the first paragraph. Industry standard. See, over here they're talking about how different countries are managing and improving the culture within their banking sector. So not so important. This part, best practices and lessons learned. Point number five, point number one, point number four, point number 10, 12, and lessons wise, you should focus on all the lessons, marking it a star. Rest everything is more or less theoretical. I'm moving towards the next chapter now. Risk culture, like I said, it is also connected to the previous chapter. Over here, this part you should read. Corporate culture is okay. Risk culture, this paragraph you should read. Quantitative and qualitative is okay. Characteristics of a strong risk culture. More or less, they will test you on the challenges that you might face. So the first point, this point, and the last point. Okay, so we are moving towards the next chapter now, which is ops risk data and governance. Over here, they're talking about internal and external data and the basal categories of operation risk management. How different categories are contributing in real life towards the operation risk of the companies. So over here, more or less, this part, this section you should read, and this part also. Execution, delivery, and process management is okay. Business disruption. These are just details being given. Foundation, loss threshold, part, marking it a star. Important. This section, RCSA program, part is important, marking it a star. KRI CAIA section is okay. ORX, you should read about this as an ORX part. As a vendor for ops risk data, biases and challenges, yes, all of them. Very, very important from the exam perspective. You should not skip it, each one of them. Anchor, confidence, you might get some theoretical question related to it. Delphi technique is okay. Profile, you can read this part, read this paragraph. Organization structure of risk governance, yes. These three designs. There will be diagram also related to it. So marking all of them as star. Let us move towards the next section, the supervisory guidelines of model risk management. Now we are slightly deviating from the other aspects that we were discussing. So over here, model development, model validation section will start. Model risk section, this paragraph, what do we call as model risk? How do we effectively manage this paragraph? Best practice, the testing part, and also there is the reasonability check part. Should read definitely. Model validation process. Okay. The second paragraph, ongoing monitoring, process verification part is important. Benchmarking is also important, marking it as star. Back testing part is important. Vendors and other third-party product is okay. Let us move towards the next chapter, which is information risk and data quality. This chapter again was in level 1 and then added back to level 2. Over here, confidence-based impact can happen to your work if there is poor data. Compliance and risk-based impact. Different types of error is okay. Acceptable in the acceptable data, completeness, and double star to consistency. These 3 points are important. Currency is also important. Operation risk quality. The basic difference between what is inspection and validation is important. Business process and business impact view should be read properly. Rest everything is okay. Validating rating models, more or less theoretical. This point, first point, seventh and eighth point also. Validation process, elements of qualitative of this part, obtaining PD, acceptance of rating system, consistency, elements of quantitative analysis, discriminatory power, calibration. Marking it as star, data quality, more or less is okay. I'm not highlighting anything over here. Validating a model's data quality aspect, calibration is okay. You can read this part for your reference. Just read, and not so important, but just read it out. Let us move towards the next chapter. Assessing the quality of risk measure. In this, you can read this example where Moody's had faced a problem because of model risk. Then this paragraph also, variability of VAR estimate. These 3 pointers, mark it as star. Factor mapping, connected to VAR mapping chapters again, so marking this as star. And basis risk. Historical case studies, credit trade and description is okay. There was one case. These 2 points are definitely very, very important. Within this case study, here's the first one. Credit trade. This entire case study should be, this entire discussion is important regarding the index part. Risk underestimation is okay. I'm moving towards the next chapter now. Risk capital and risk attribution, which is RAROC related chapter. We're going to be talking about this now. First of all, the basic definition of what is a risk capital, marking it as star. Then using economic capital approach. This paragraph is important. This part is also important. There we enter into the RAROC section. How is RAROC used? This is also important. Calculation based part has been, they have been asking calculation also. Okay, this formula. Okay, all of this, they are actually explaining you what is the formula, components of the formula, mark it as star. Burnout capital, should definitely read. Example, marking it as double star. This has been tested. The rate of calculation has been tested in the past exam, so do not skip it. Then there is adjusted RAROC also, which is going to come further. Time horizon is okay. Default probability, confidence level. This part also you should mark it as star. Adjusted RAROC is also important, mark it as star. The sum. Moving towards the next module, diversification is okay. Standalone marginal capital, should read this part. Best practices. This discussion, this paragraph you should read. Let us move towards the next chapter where we are talking about a range of practice and issues in economic capital framework. Slightly theoretical. You read this part. The coherent risk measure from level 1. Spectral expected shortfall is okay. The risk aggregation, the first two paragraph and these part you should read. Okay, more or less theoretical. Validation of model. Management oversight, data quality check. Sensitivity analysis of assumption. Backtesting, benchmarking, and P&L attribution. Dependency model and credit risk is more or less okay. Theoretical. Market-based challenge. Okay, optionality in banking book. I want you guys to read this part and this paragraph also. Pricing behavior. PI's recommendation. First point. This point. Third point. Seventh point. And 10th point. This section is almost okay. Management incentive, best practices. More or less okay. So we can move towards the next chapter. Capital planning at a large bank holding company. Okay. And how does supervisors try to manage that? So capital plan rule, this entire paragraph you should be clear. They're asking banks to have a stress testing program. Okay. So capital planning policy is important. Then impact of capital adequacy is important. How does the capital adequacy process works in bank? More or less okay. From the governance perspective, this you should read the first two paragraph. Policy perspective, it is okay. Stress testing and stress scenario. Should read this part. Biasness aspect, quantitative and qualitative biasness. Read these two paragraph definitely. Loss estimation approach. These two paragraph. Impact of capital adequacy in operation, market and counterparty. Okay, we can go back to this section. PPNR projection. Read the first two section. This part. Rest more or less it is okay. So we can move towards the next chapter, stress testing banks. Okay, over here again we will SCAP program is slightly important. It has been tested in the past exam. Okay, so marking this entire section a star. Okay, over here they have a table. So I'm just marking this table as also star. Coherence, this part, flight to quality aspect. Challenges in modeling, business cycle, balance sheet modeling part, this paragraph also. Okay, C-car comparison, rest is okay. You can read this part, this paragraph. Next, we have guidance on managing outsourcing risk. These are all smaller chapters now. Few smaller chapters which are going to come. Okay, concentration risk, compliance risk, and country risk. Effective operation of management. Mark this a star. Due diligence of the vendor. Read the first two paragraph. Contract provision, the scope. Right to audit. Confidentiality and secret information perspective. Indemnification and default and termination. Then insurance and default dispute resolution, subcontracting. Okay, in the past exams, even though the chapter is very small, they have tested one question from this chapter also. Okay, so it depends upon how they want to give weightage for a particular chapter for a particular exam. The next is managing AML related part. This is also a very small chapter, highlighting few important sections over here. This paragraph, these three pointers. Acceptance is okay. This part, correspondent banking is important. This entire part is important. You can read entire correspondent banking market as star. Let us move towards regulation of the OTC market, smaller chapter, changes that they brought to make sure that the OTC market is more regulated, that those Basel related changes are being discussed more in detail. Okay, central clearing. You can read this part. Okay, these are the changes that have been brought. So market is important and star. Okay, impact of the new rule, re-hypothecation is also stopped. So marking it as star. Let us go to the next section where we are talking about capital regulation before. This is where the Basel related chapters will come into picture. First two chapters of Basel are very, very important. I'm marking it, whatever I feel is going to be there explicitly. Mm, Capital and risk weightage. These 2 points important. What exactly is there in tier 1 capital initially when it was there? So that is being added as a section over here. Next, RWA is okay. Credit equivalent amount is important. This calculation is important. Mark this question as star. Original exposure method is okay. Then netting was added. Market risk component, net replacement ratio, star. Mark this question as also star. Then there were amendments which have been brought in. The trading book and the banking book section you should read. This has been added but was removed later. Tier 2 capital, Tier 3 capital, sorry. This formula is very, very important. This is the same logic which we'll see further when we go towards test var. Marking this as star. The sum is also star. Back testing part, very, very important. In the back testing chapter, this concept in market risk is also there. So marking this entire section as star. Pillars of sound management, minimum capital requirement. Market discipline is okay. Credit risk aspect of it. Collateral adjustment, marking this as star. Both the sums. Worst case PD as a logic is important. In fact, you can read this as star. You can mark this as star formula. Maturity adjustment is okay. Foundation IRB. This IRB is okay. Should read what is the difference between foundation is a main part and slightly advanced in the advanced IRB. These few things the bank can calculate on their own. Within the operation risk capital section, you should read the basic indicator and mark it as star. Solvency is very important for insurance companies. You should read this part. Then, okay, everything is okay. We can move towards the next chapter, the second chapter, which talks about how the changes happened after that. So, stressed VAR as a concept is very important. You should read this paragraph and mark this formula as also star. Okay, marking this example as star. Incremental risk charge is okay. You can read the constant level of risk. Comprehensive risk charge, you can read this paragraph. Basel 3 capital requirement. Okay, you can read this first point. This point, third point. Tier 1 capital section you should be clear on the changes that has been brought in. This part important. Capital conservation buffer, globally systematic bank is important. This paragraph is also important, you should read it. Countercyclic buffer as a concept you should read, and why are we bringing countercyclic buffer. Liquidity risk management, liquidity coverage ratio, along with the formula. This part, net stable funding ratio, very, very important, marking this entire section. See, you don't have to remember the table as such, but what is happening, how they're calculating, that is important. Marking this question as star. Cocoa bond, this concept of gold plating and ring fencing is important. Cocoa bond is okay. So you should read what happens in a cocoa bond. Then swap execution facility. This point is also connected to one of the previous chapter. Walker rule and Dodd-Frank section. Let us move towards the third chapter of Basel now. High level summary of Basel 3 reforms. Small chapter, not nothing in very, very detailed over here. You can read this paragraph. Operation risk adjustment. Leverage ratio you should read. Then we can move towards the next chapter. Basel 3 finalizing post-crisis reform, standardization approach. This chapter is basically the detail of Standardization approach, which is also there in level one in very short format. This entire two paragraph you should read. Why are we moving towards the standardization measurement approach? These all pointers are not so important as such. They might test you, but it is very difficult for you to even remember those pointers. So let us move towards the next chapter, cyber resilient organization, focus, fundamental improving. Read this two paragraph. For the employee, read that section. Read all of them, marking it as star. Resilient software detection, anomaly detection, star. Penetration testing is also important, marking it as star. Cyber value at risk, reverse stress testing in cyber risk. Moving towards the next chapter, cyber resilience and range of practices. Slightly lengthy chapter. Cyber security strategy. Read this section. Workforce part. Supervision of resilience. First two paragraph. Information security is okay. Incident reporting, response and recovery important. TDOS is important. Sharing information among banks and all is more theoretical. Agency, risk of third party. Governance of third party should be there. You should read this section. Business continuity and availability, read this paragraph. Auditing and testing is okay. Operational resilience, impact tolerance for important business services. This point, marking it as star. Tools, more or less theory. This part and firm PRA, more or less okay. Yes, this section. Operational resilience with operational risk policy, marking it as star. This diagram also, entire discussion over here. Primarily highlighting what is the difference between BCP and operational resilience and operational risk policy and operational resilience, how it is different. Moving towards the next chapter, which is principles of operational resilience. Key elements of operational resilience, this part is important. When we talk about the principles, overall governance, operational risk management, you can mark operational risk management as star. Mapping interconnection and dependency as star. Incident management as star. And then we will move towards the next section. The next chapter, striving for operational resilience. What does board of directors they should do? Okay, this first paragraph is important. Governance part, integration part, effective OR approach. Read this entire section as star. Potential benefit is okay. So we are done with this chapter. We are done with Operation Risk Book. Okay, I'm sure this few important parts that I've highlighted. Please make sure that you have gone through all of them properly. Don't skip it. Okay, and I hope this video will help you in preparing for the exam. If you like my video, do share and subscribe to my channel. Also, I've been creating other books video also for important concepts. I hope that will also help you. Thank you.